Well, now we've got Radhika Rao who's joining us on the show. She's economist at Forecast and is joining us on the line from Singapore. Radhika, morning. Great to have you with us. First off, given the sort of political turmoil that's undergoing, the Europe is undergoing, of course, would like to get your economic perspective on it because, we've got Greek leaders who've already been warned that if we don't have the bailout actually going through and if we don't have the leaders who agree to those bailout conditions, Greece could be heading for a bankruptcy. And it seems like, the next step also is likely to be that Greece would be out of the European Union. Do you think that the markets have already factored in the worst of it? Because we don't seem to see any sort of stark reaction this morning.
Hi, good morning. First of all, I think the results from France were largely expected. Greek also was largely expected. So no surprises there. That's one of the reasons why the markets have been steady after yesterday's bloodshed. But I think what is going to cause the next leg lower will be when the Troika and IMF and Eurozone in particular do not pass on the next bailout funds. The next tranche expected before end June. The Greek government, if in place, is expected to come out with more fiscal cuts so that they can meet the 2013 and 2014 fiscal goalposts. So that will be the major watch factor. If the peasant parties are not able to conjure up a coalition, then I think they're going to head towards the second leg of polls in early June. And if a government comes out from there, they'll have a very busy data calendar ahead of them because as soon as they assume office, they have to come out with the fiscal, more austerity measures. So I think the markets are in line, wait and watch at this mode. So I don't think they're overreacting, but so to a certain extent, I think Greece elections and French elections were also priced in. So hence, lack of real reaction.
Right, Radhika, I would also like to get your quick view on currencies then. Do you expect the dollar to get stronger from here? What's your view?
Yes, I think there are not many liable choices out there. So I would think dollar would still remain the safe haven option. Flowing, the green shoots from the U.S. data also don't seem very, sustainability isn't still in question. So I think, given the balance of risk and, of course, Europe in doldrums, so I think dollar is the only safe option out there. So we expect it to benefit if risk aversion spikes yet again in the coming weeks and months.